Hi everyone, today let's talk about Jackson Hole and the Fed minutes. Then we'll get into all the usual data and charts, and we did get a big red bar here today. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's see what we can expect from Jerome Powell in his speech tomorrow. He is expected to speak at 10 a.m. Eastern Standard Time. But what is he going to say? I don't expect too much different from what he's already said at the Fed meeting and now in the Fed minutes, but let's see what that was. He's going to say something along the lines of, we are still data dependent. He's probably not going to point in any direction. Ambiguous here is the expectation. But even with that, he's going to leave little doubt that we are going to start cutting in September, at least in my opinion, and that's what they're saying here. The minutes from July showed the vast majority of members favor a September rate cut, barring any surprises, and I don't think we've gotten any. I think we've been either in line or leaning more towards a September cut since then. But interestingly, they are saying there's a 1 in 4 chance that we actually get a half a point cut. I do not think that is very likely, and even based on these percentages, 1 in 4 is a low percentage, but I think it's a lot lower. I think it's closer to like 5 or 10%. Not impossible, but very unlikely in my opinion. Markets have been stable, the economy has been pretty stable, and we still haven't seen inflation come down all the way. Even if we were to introduce flexible average inflation targeting, we are still higher than that 2%, and I just don't think that they're going to do it. So he's probably going to lean dovish, just like we've been seeing in the last FOMC, but I don't think he's going to go all the way as far as saying that we are going to cut in September quite yet. Moving over to seasonality, you can see it was supposed to be kind of bearish here yesterday and today, and sure enough it was. We'll see if this continues lower until the 27th, which is supposed to be the low of the month, and then after that, slightly bullish into the end. So bearish from here until the 27th. Moving over to the economic calendar, you can see we did get continuing jobless claims a little bit better than expectations, but initial jobless claims in line, and the previous number was revised down, so that was good. And then the economic data actually came in pretty good, and existing home sales was also pretty good. 30-year tips at 2%, a little bit lower than the previous read, and then the Fed balance sheet actually rose here pretty substantially, up to $7.194 billion versus $7.178 billion, so about $16 billion higher than the previous week. And then looking at tomorrow, remember we have Fed Powell speaking, new home sales also tomorrow, and that'll pretty much wrap it up for the week. Moving over to Max Pain, you can see it's here at 551, stepped down slightly, but the current stock price is 556.76, so that moved down a little bit. Top of the put still up there at 563, put wall here at 555, so you would expect to find some support in that zone, 550 to 555. Total options not a ton, put call ratio pretty low there, which does give markets a little bit more room to the downside. And then you can see that here on this chart, middle right there, 551, 552, and right now we're up here around 556, so you could see about a 1% drift lower. Moving over to the chart, starting off with the S&Ps here, you can see big down candle, 0.89 on the day after hitting this trend line, overthrew it, and you can see the low from the 16th there at 56.39.02, and then the high of today was 56.43.22. So we just barely eclipsed that gap here. We touched the wick from the 16th, and then we immediately sold off really substantially. Momentum stepping to bearish, RSI stepping down. You do have the SMA there, which is trending higher. If it's going to find some support, it needs to do it there. That is the zone, but even between here and there, there's a lot of room to the downside still. So everything looks short-term bearish after this massive run, hitting major resistance. This is a lower high at this point, in my opinion. If we eclipse the lows back from Monday candle, then we are absolutely headed lower. So we'll see how it plays. 9 EMA sitting there at 55.25, and then the trend here sitting at 54.99. Probably going to get into that zone at a minimum. And then looking at the normal SPY charts here, you can see hourly chart straight down, little bit of rally at the end of the session, some decent volume there on the hourly chart, got close to that 554.87 level. So it wouldn't shock me to see just a little bit of short-term rally, but I do expect this to be the start of a downtrend. And you can actually see on the SPY charts, we did fill that gap a little bit better. The open was 562.87 and the high of today was 563.18. green. So filled that gap fully here on the SPY, got some selling immediately after that candle. You can see it, high of day was immediately on the open, and then we sold off really powerfully to that next support, and then that 9 EMA sitting at 551.29. And then moving over to the Tasty charts here, you can see big down candle, got below that ATR trailing stop, which was 558.82. So we've taken out the stops, and now we're rolling down. Got a spike on volume, which was a down candle, which makes sense. We've had no volume for a couple days, and then we got the big down candle, and then we see some volume. And then you can see volume weighted MACD is not moving with it yet. Volume is ramping into that bullish direction. So we'll see how that plays. But right now, expect a short-term down move. And then looking at that 4-hour chart here, you can see we took out that ATR trailing stop. So we are back into bearish conditions. We've been in bullish conditions all the way since the 13th of August. And now here on the 22nd, we are now back into bearish. ATR trailing stop is at 565.41. And then that lowest ATR band would be your price target, which is sitting at 552.06. Moving over to the NASDAQ, same thesis here. We were grinding this trend line here. We fell straight down to the next one in the 55 EMA on the daily. That was at 19,457. And you can also see momentum, substantial step down. RSI stepping down substantially. You would expect follow through here. At a minimum, I would be looking at the 21 EMA down at 18,930. We'll see how that plays. That would be about a 2.5% to almost 3% move lower from current price. If that level breaks, we're probably headed down to the 144, which would be about another 4.5% lower. So definitely some downside potential here off of the back of today's big move. And then moving over to the normal charts here on the hourly and the daily, you can see that big move up, pre-market, big wicks, straight down throughout the session, took out 477. I stretched out these trend lines and you can see they actually culminate right in that same exact spot. So interesting zone, finding support there. Makes sense we didn't push down to 471.93. I kind of thought that we would push down a little bit further during the session, but we found a bottom in here, which actually makes a little bit more sense looking at this chart. But same thesis, momentum very bearish, RSI pushing towards that SMA. We'll see if we find any support in that zone here, but that's a substantial move. We're currently at a 57.71 and the SMA is down at 47.96. So that would be a really substantial down move. And just for reference, we stepped down about 6 points here today, and we would have another 10 points to go over the next 2 days to touch that level. And then 21 EMA sitting there at 460.73, which again is another 15 points lower from current price. Moving over to the Tasty charts, you can see we rejected off of that ATR trailing stop, never left bearish conditions, and now we're pulling back right to that 8 EMA, which is at 473.10. Now, if this structure in the middle breaks, the lowest ATR band is sitting all the way at 427.62, which is basically at these lows from that terrible Monday session. So something to keep in mind. If this move follows through like it could potentially, that would take us all the way back to these most recent lows. Momentum not going with it, but we did see some volume selling on the day. We are at a decent level here. You can see some zones where you could find some support. So I don't think we're going to crater immediately, but this is definitely a candle that you need to pay attention to, especially after the massive run that we've had already. And then looking at that 4-hour chart, you can see the lowest ATR band is sitting at 470.90, so that's about another 1% lower from there. And now you can see 55 EMA sitting right there as well at 470.54. Momentum bearish. Again, look at that volume ramp, selling pressure, took out the ATR stops, so we're back into bearish conditions here on the 4-hour chart. And I would expect this to roll pretty substantially. I think we'll get through all these EMAs, and then I don't think it's out of the question to say we could test these lows back down in the 430s area. Moving over to the Russell and the Dow, similar thesis to what we had yesterday. Got into the zone, could not break higher, immediately rejected, down 0.88. Momentum hasn't rolled here on the Russell quite yet, and then you got the 21 EMA sitting at 212.44. This is holding up decently well. Support is still 212.10, and then you got the 9 EMA sitting slightly below those at 211.20. Zooming out here just a little bit, you can see this was major trend resistance, and then your major trend support is sitting all the way down at 203. So definitely some levels of support to watch in here, but the trends are sitting much, much lower. And then similarly on the Dow, you can see we've been in this kind of expanding wedge, and the low of that is sitting all the way down in the 392.44 area. Moving over to the Mag 7, you can see we just missed that upper trend line. I thought we were kind of headed to that zone. 273.41, and then the trend was sitting just above that at 274.79, but we did not get there. You can see momentum step down, so expecting more follow through on that. 21 EMA sitting at 257.55, and then you can see trend support sitting below that at 252.99, 253, right in that zone. So downside to come, potentially as much as 4%, and then we'll see what happens after that. Moving over to Apple and Microsoft, you can see Apple down 0.83, could not get to the level once again. That was 230.28, fell to support at 224.36, didn't break it. It's bouncing a little bit after hours, momentum stepping down for 2 days in a row, so you expect more follow through on that. But so far the level hasn't broken, trend support just below it at 223. If these zones break, 21 sitting there at 219. And then look at Microsoft. We've been watching this as a distribution here with that fake out breakout. We're back into this distribution, and now we are fading at a lower high, much lower than these previous highs here. And now based on that, you would expect a breakdown at least to that neckline, which is sitting around that 388.07, or another 6.5 points lower in my opinion. Moving over to Tesla and NVIDIA, both of these cratered quite a bit here today. Tesla giving back all the gains for the last couple of days. I went ahead and added some structure here so you can see mark some of these tops. Makes sense, we kind of culminated here. And now if this is going to be a structure, you would expect to move down to this lower band, which is a substantial move. That's about 19 to 20% lower until we hit that trend. And that would be all the way down in the 167 or back from the low from this consolidation. So something to watch, definitely interesting. And it does not look great, down 5.56% here today. And then looking at NVIDIA here, you can see trend support sitting down at 520.52. If this zone breaks, you got the 21 sitting there at 113. Again, that's about 2.5 to 3% lower to that trend. And then the 21 sitting at 8%, 8.5% lower or so. So definitely some room to the downside. Momentum 2 days in a row to the bear side. Tesla there down as well. You can see Tesla did move to that SMA quite quickly. One more candle or so is probably going to touch it, but we'll see what happens after that. And then looking at NVIDIA, much more room here towards that SMA. So I would expect this first zone to break, potentially the next one. We'll see what happens. Moving over to Amazon and Alphabet, you can see Amazon down 2.2%. We got this trend line here now, so we're in this kind of bearish structure. First test, second test, sell off from there. Momentum stepping to bearish, RSI stepping to bearish. Touch that 181.41 level, selling off. 21 sitting in that 174.23 area. Wouldn't shock me to find a little bit of support here, but realistically the 200 is sitting at 171.42, and then we'll see what happens after that. There is room to the downside on both these indicators, so I would expect more downside to come. And then similarly here on Alphabet, this still looks like a big bear flag, big move down, bear flag setup, big move down. And then if that zone breaks here, 150.26 is within striking range. And if we get that kind of a move, that's down 9.5% or so from current price. And from top to bottom, that would bring you down about 22%. So something to watch here. This looks super bearish to me and actually looks like a pretty good bear setup if you're looking for a decent trade. Might look at this tomorrow. We'll see how it trades. Moving over to staples and discretionaries. Staples pulled back slightly, 0.15, nothing crazy after meeting those all-time highs yesterday. Momentum did step down, so maybe we see a slight pullback, but this is still very much a bull trend. Definitely extended in the short term, but I would expect it to hold up, especially considering the way the rest of markets look. Staples is probably the place to be, probably moving towards that risk-off environment. And then looking at discretionaries, we're still hovering right at this trend line, pulled back right to it, touched the trend, found a little bit of a bounce. If it breaks, 21 EMA sitting at the 180.10 level. Again, that's about a 2% down move from here. And then the 200 sitting below it at 177.82, which would be about 3.5%. And then if that structure breaks, we're probably headed back to these previous lows, down around the 170 area. So right now we're holding support, still looks okay, but very much a lower high in my opinion. Moving over to wood and gold, you can see wood seems to be pretty correlated here. So we had this structure here, hit that resistance, and now we are selling off from there. If this sells off to this next low, markets are probably going to move with it, which would give you a pretty substantial move. From top to bottom, that would be about 6.5%. And the last move we saw was that mid-July move, which was also around 6.5%. So if we did see that next move, markets are probably going to see a similar move with it. And then gold, slight pullback here at 1.2%. Still holding above these previous highs, but momentum fading, RSI breaking below the SMA. I would still expect that higher low setup. I still think gold is going to drift higher as interest rates come down, but short-term pullback, it seems like. And then 21 EMA sitting there at 225.66. Moving over to RIOT and Marathon, these were very strong yesterday, but we talked about that 21 EMA being resistance, and sure enough, it rejected from there. Could still hold a higher low. Momentum is still bullish. RSI still looks okay, so doesn't mean this trade is completely dead the way that some of these other trades look, but I would be a little bit more cautious here today. Want to see some actual bullish movement. Otherwise, if we stack candles here to the downside, we're probably headed back to these lows around $15. And then similarly here on RIOT, that low would be around $7.50. Moving over to Breadth, 20 and 50-day Breadth, you can see 20-day, look at the high, touched the level at 86.87 and immediately gave it all back. The high of day was 86.87, the level is 86.53. Momentum stepping to bearish, that's the first step down we've seen. Similarly here on 50, both of these rolling down, so many more days to come in my opinion. The first step doesn't mean it's going to break immediately. You can see back in July, first step. Next one was down, but then we got a little bit of consolidation, another move down, consolidation, and then it cratered. Similarly here, we got a bunch of steps down before this cratered, so doesn't mean it's happening immediately, but it is likely to come in my opinion. And then looking at 50-day, same thesis here. Mid-July, this one turns over a little quicker, did get a decent pullback, big down move. And now we got that first step to bearish momentum, broke back below the trend line here, looking for that 86.66 level. And then if this structure continues to break, probably headed back down into the 50s or potentially as low as these previous lows in the 40s, which would mean markets are moving much, much lower in my opinion. Moving over to the dollar, right on cue, the dollar finally stopped falling. We had 4 days in a row of straight downward movement, and now we got a slight bull candle. We're back above these trends here. Engulfed the previous day, momentum stepping to bullish. RSI was super oversold. We talked about how oversold it was. It was still very much in a downtrend here, but it doesn't mean we can't see a short-term pullback on the dollar. We'll see how it fares with Jackson Hole tomorrow. That could put some pressure on the dollar. But at this point, I think we've pretty much priced in that September rate cut, and it wouldn't shock me if the dollar stabilized in this range between 101.25 and 102, or potentially as high as 102.98. Moving over to yields here, yields have actually caught a little bit of a bounce. They've been in this consolidation here. I still think it's going to roll to the downside. It was just super extended, but RSI has been gaining. Momentum's a little bit bullish. We have a little bit of a base. You could see this rally a little bit. If yields rally, that's typically bearish for markets, so something to watch. Looking at the 10-year similarly here, we have a low, slightly higher low, momentum bullish, RSI bullish, still not into normalized conditions, 10-year sitting at 3.85 with the 2-year sitting around that 4% area, but overall seems like a slight bounce after this very long down move. Again, this is structural, expecting cuts in September and so on, but it doesn't mean that yields can't bounce in the short term. Moving over to bonds, J&K rejecting off this zone at 96.51, touched it barely, momentum stepping to bearish, RSI stepping to bearish, so forecast a little bit of down move there. And then looking at TLT, you can see lower high setting up, slightly bearish here today, about 1%. Momentum stepping to bearish, RSI breaking down. Structurally, this is still a bull trend, so don't think this is going to crater all the way down to these previous lows by any means. But short term, could fall, maybe 96.50, maybe even this lower trend around 95. Catch some bounces in there, and then we'll see what happens after that. Moving over to volatility, this did exactly what we thought it was going to. Move index fell a little bit, nothing crazy, momentum slightly bearish there. But look at the VIX, 2 bullish days. We expected continuation. I expect more continuation here. 20 is the next price target. RSI is there as a little bit of resistance. You can see it here. We'll see how that plays. But honestly, this looks pretty good. I think we're going to see some spikes. Again, 1850 to 20, and then we'll see what happens after that. Maybe as high as 28.28, 28.89. Moving over to my accounts, I actually traded really well in my main account. I was a little bit bullish going into the session. I didn't take my profits, but I was able to flip it and make money to the downside on some calls. And with all of that, I actually only lost about $30 on the day, which was awesome. Considering that the NASDAQ was down about 1.5%, Russell was down a little bit less than 1%. Russell calls covered almost all of those losses, just a few dollars there. Didn't change this position at all. Still looking to make the $3 that are left on that position. You can see $95 profit with a $4.15 credit. So still some protection there. And really, this says 4 days, but it's only 2 trading days. It's just Friday and then the Monday session. And then looking at the Qs here, I'm still rolled out to 472. I took the shares off and then put them back on a couple times. You can see I actually put them on quite a bit lower than current price. The buy price was 474.90. And then after hours here, we're sitting at 475.80. So about $1 higher from that buy price. Took it off, mitigated some losses, made some money on some calls, traded some counter trends with some puts, made money there. And overall mitigated just about all of these losses. Turned in a pretty good trading day. In terms of positions for tomorrow, basically flat, slightly bullish, just because I think we might see a slight rally at the beginning of the session. Again, I don't expect that to last. I think we're going to see lower lows over the next couple days at least. Let me know down in the comment section what you think Jackson Hole is going to bring tomorrow. What will FedPal say? Is he going to be super dovish? Could that help markets? Or what do you think? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.